Okay, Mega team, thanks for tuning into today's video. I hope everyone is having a fantastic day. We're going to go ahead and get straight into the Bitcoin chart. The focus of today's video is primarily taking a look at what exactly needs to occur for us to continue downwards and reach our lower targets, and what actually needs to happen for us to flip this downtrend and continue upwards into a new bull trend. If you want to find out all of that, stick around to the end of the video. We're going to go through those in quite some detail today. And of course, I do urge everyone to head down to the comment section down below. Click the link to join our crypto channel over here. We have a Telegram channel, completely free. We have over 3,000 members now, which is great. We post daily updates and charts, polls, little educational posts, little commentary by myself, and a variety of other comments. If you're interested in joining our VIP channel, of course, you can contact me directly from the free channel, and you can see our monthly results in the VIP over here. The VIP channel is a standalone Telegram channel with over 400 members. We post daily updates, exclusive updates, trade signals, long, short, spots, you name it, entries, exits, stop losses, everything is set out for you guys to capitalize on the market. With that being said, guys, let's go ahead and dive right into the video. So taking a look at Bitcoin over here, we are in a little bit of a sticky zone, and I'm going to talk about briefly what is actually occurring on this chart. And this is the chart we're going to be focusing on today, and then we'll break it down. So, sorry, clear my throat a little bit. What has happened in the last little bit? So you can notice these zones over here for all the new viewers. These gray zones are basically support and resistance zones. So the difference between a horizontal level, which is a singular line, this represents a singular price point of support, whereas gray zones represent a zone of support, meaning the support is found between 2 or 3 horizontal levels. So that is what we're seeing over here. And moving downwards, we have these huge gaps. So of course, we had this huge gap over here in that market, which resulted in this massive crash down, meaning that between this point over here and this point over here, we didn't really have a lot of major support. There wasn't really much support, which enabled that price, when it did lose that support level, to kind of flow downwards relatively quickly. We saw the same thing happen over here, and we saw a very similar thing happen over here, where we had these aggressive red candles continuing to the support and back down. So you should notice a trend when it comes to trading. First and foremost, the trend is the price will move between supports and resistances, and the velocity and speed of the moves is determined by the strength of the supports lost or the strength of the resistances broken through. So with that being said, we are at a very major, very strong support zone now. And this support zone is dated back, obviously, to the all-time high in 2017, as well as that pre-bull market top, which we saw in 2020, which represented a major zone of resistance and contention in the charts before we went on this parabolic move upwards. So, yes, this 18K zone, very strong support. We're not looking at the log scale today. We're primarily going to be focusing on this standard chart today. You can see it's a very strong support. So, what actually needs to occur here for us to flip bearish? If the price loses this level on the 7-day, that would be confirmation that we flip bearish or continue, because we are bearish still. We continue bearish, we continue this downtrend downwards to our subsequent targets. And our target stood at 13,900, all right? Represents the top over here, represents a period of resistance and a period of resistance. Our next target is $12,000, representing the local tops of the wicks of the candles at the middle, which is the POC line as well. We'll go ahead and bring up the POC line. We're sitting at around 12,000. So zoom in a little bit. We can see over here, it's sitting at around 12,000, all right, give or take. And then of course, our lower level, which is around 10,000, a little bit under $10,000 is our psychological, major psychological support. So if we do lose this level here, guys, on that weekly chart, we can expect the price to move downwards to these next levels. But until that happens, guys, we're at major support. And major support is indicated by that horizontal level we just showed you, this gray zone, as well as this diagonal uptrending line on the log scale. So what actually needs to occur for us to break over this and flip bullish? So I've been telling you guys on the channel, we are more bullish than bearish now. I don't think the bottom's in. For the bottom to be in, we need a macro trend reversal, meaning we need confirmation of a trend reversal. Until that happens, the bottom is always going to be speculative, and we're always going to have to assume where it is until we have confirmation. So no one can say with absolute certainty, this is the bottom. Anyone saying that is taking a guess. There's no chance. We have no data to suggest that. We do have data to suggest we are in a position that has resulted in the bottom 2 previous times, which is a very strong bit of data that we have to take into consideration. But for the bottom to be in, we need confirmation or reversal. Where does that actually occur? Confirmation reversal occurs when we break over the 200 moving average again. All right, break over a 200 moving average, we have a confirmation reversal. You can see every single time we break over the 200-day moving average, after losing it, we see a nice trend upwards. Whether that trend is sustained or whether we drop below is another question, but when we do break above it, we generally do not head back down below it. All right, we can see over here, back in 2015, again, 2020 broke above it. We didn't end up back below it. So that is what we have, that macro trend reversal. Of course, we need a 7-day close above the 200 on the 7-day chart, on the weekly chart. Okay, guys, candle close above the 200 on the weekly chart. That will trigger a macro trend reversal. What we need to see after that is a little different. All right, so if we go ahead and chuck in our 200, we can see it over here. All right. For us to actually start a new bullish uptrend or a new bull market rally, a lot more needs to happen. So this is just to trigger the bottom. This is to confirm the fact that the bottom's in. All right. Now, obviously, this analysis is of 2 data points. So yes, it could fail this time. There's no guarantee. Nothing is a guarantee. But according to the data, we need to break over 200, a 7-day close over 200 to confirm that bottom. Now, what we would need to see to actually flip bullish, we need to see a break over 28,000. We need to push upwards into this resistance range, break that resistance range, and finally clear this resistance range. And only when we're above 48K, that is when we are macro bullish. All right, that is when we're macro bullish. So I hope this video today has been helpful. Again, like I said, I wanted to keep it nice and short and sharp. I didn't want to go into too much. These are the levels we're looking at. All right, copy this chart down. I'll delete everything on the chart for you real quickly. Zoom out a little bit, copy this chart down. Really important chart to look at. These are the zones. When you break these resistance zones, you expect moves upwards. When you break below them, you expect moves downwards. It's really that simple. It doesn't get more simple than that. All right. And moving on to the log scale chart, this is another chart that has basically predicted everything perfectly since that top. Since that top, which we call over here, is predicted this entire move absolutely perfectly, all the way down to $18,000 where we bought. It went down to about 17,800, a little bit lower, but exactly to where we bought, obviously, and we sold it around 21,000 for 20% profit. But keep these charts, update them, have them on your own computer, have them on your own trading view. But it's going to help you a lot going in the future. All right. That being said, guys, I want to go ahead and introduce Bitget and then introduce the Crypto Academy, and we'll get back into it tomorrow with a more extensive and larger analysis for you guys. Until then, I'll catch you later. Okay guys, so we're going to take a look at Bitget next, and I highly recommend sign to Bitget. This is what I personally trade. So if you want to be trading where I trade on a daily basis, sign to Bitget. In the comment down below, you'll see the referral link. Just go ahead and click that. You can sign up and you get access to our reward center if you sign up. And there's a whole range of different things you can do here to basically get rewards. And you know, the rewards bonus is up to $4,163 US, which is pretty significant. But you can go ahead and get access to that if you click the link down below. Beyond that, guys, I really do like Bitget Exchange. I'm not just saying that to shill you guys a referral link. Honestly, sign up without the referral link. I don't care. I'm honestly telling you guys 0.02% trading fees is just too good to miss. You just really can't miss it. It's 0.02%, guys. It's insane. But this is the futures over here, and it's a global exchange that doesn't have KYC, so anyone can access this from anywhere in the world and get access to all the tools. So whether you're in Australia and you generally can't access futures, you can sign up here and get access to futures. If you're in, let's say for example, I think the UK and you can't get access to futures, you can sign up here and get access to futures. If you're in America and you can't get access to Binance or Binance Global and you can't access a lot of their spot trading pairs, they have all the spot trading pairs that Binance has over here plus more. They have over 250 spot trading pairs and all the big ones on this exchange that you can trade, and the liquidity is quite high. So I highly recommend signing up here, and of course, like I just mentioned, you get access to that reward center, there's copy trading, there's a whole range of other things, and go ahead and sign up, guys, because it really is probably the best exchange out there. All right, let's go ahead and get back into the video. Okay guys, I want to take a quick moment to introduce the Become a Trader course at the end of this video. This course was designed by myself and Wolves of Crypto. We put together a whole variety of knowledge to create the most cohesive, understandable, and beneficial trading course there is on the market. If you're interested in learning how to become a trader, if you're interested in learning how to use technical analysis, if you're interested in learning how to apply market analysis to different cryptocurrencies, this is a course for you. We teach you everything from the fundamentals, the basics about what cryptocurrency is, how to trade cryptocurrency, mastering the craft of cryptocurrency, diving into a whole range of technical indicators, market structures, and teaching you how to utilize these when finding trades and applying risk management strategies to become more profitable over time. We even dive into market psychology, human psychology, and provide a variety of different videos and educational content, including courses and quizzes to assist your learning along the way. If this is something you're interested in, guys, go ahead and contact us down below at the cryptoacademycourses@gmail.com. We'll send you an email back with all the course information, the structure, the payment details, and everything else you need to know. That being said, guys, I hope you enjoyed the video today, and we'll catch you in the next one.